A lot of AI is being sold in the London market right now. From where you sit, what's the tell?
Taking that natural language, turn it into standards and structured data so that we don't have to have a laborious human intervention to start mapping data or reviewing it. It's got to be very careful about making assumptions.
How do you believe we can standardize that across the chain without someone losing commercial ground?
We need to be able to understand who is sending it, and traditionally sending an email with an attached spreadsheet doesn't really address that from an analytical point of view. And the data payloads with an author contextualize column titles and data in a much more structured way.
Technology or technical debt. Those are words nobody likes to hear, but those are some of the decisions that sometimes looks clean on a roadmap. What's your honest advice to an MGA facing that call?
Your finance probably dictates the first when you should make a move. Cut it down, look at your essentials, look at what's needed for regulatory requirements, what's needed for financial reporting, and concentrate on those moving across into the new system.
Hi, everybody. Welcome to Inside Delegated Authority. Today's guest is Kirstin Duffield, CEO of Morning Data, a various company she led for over 30 plus years, and technical advisor to the London Market Data Council. She spent her career at the coalface of London market technology, helping MGAs and brokers make their data actually usable at scale. Today, we dig into what 3 decades in this space teaches you about where delegated authority workflows quietly break down. Welcome to the show, Kirstin.
Nice to be here.
Thank you. To kick us off, you've been in the London market for over 30 years. What's the single best shift you've seen in how regulators now treat data inside delegated authority structures, and are firms keeping up?
Well, it's a really good question because we're all very worried about what our regulators might have as a view of what we're doing. It's certainly the single thing that gets everybody in the room anxious that is being met. So it probably is the most important subject matter at the end of the day. But regulators themselves are probably less tolerant of delays. That's probably single in the delegated space. It's not going to be as acceptable to be sending bordereaux in 90 days after the subject within the bordereaux is being concluded. And I think that it's very impactful on the operations of the organisation as well. The capacity providers want that information earlier, and in order for them to remain solvent, in order for them to remain regulated and providing their own requirements, they too need to know what's going on in a more timely manner. So I think timing is probably one of the biggest shifts.
Everybody knows that time it becomes critical, but still we build the bordereaux manually, and it takes us huge effort at the end of the month, at the end of the quarter to build them. What have you seen on the impact of the MGAs that they have to build this manually end of month, end of quarter?
I mean, it's frightening, really. I have come from a world third, fourth generation in my organization. I didn't even realize until well into my career that the market really had a problem because our clients were always collecting data first. Now, we started very much more in the broking space than in the MGA space, but what's the difference? Okay, there's lots of operational differences, and there's a tendency to have greater amounts of delegated authority in an MGA versus a broker. But these days, we see a good crossover. We see brokers who operate line slips are still structurally very similar. They're still requiring rows and columns of data to be transmitted between parties in the chain. So I think some of the challenges that are really there is that you've got to have that data to point number one. You've got to have that data in a more timely fashion. You've got to understand what the contents is of that data. There is a tendency for underwriters to want everything, but then the everything for one underwriter is different from the everything from another underwriter. So the intermediary is sort of torn in lots of different directions to be able to satisfy each of those capacity providers. And hence why, as I'm sure we will get to, the infamous cover holder 5.2, trying to look at standards. But I don't think standards should be anything anyone should be frightened of. I mean, after all, we're all pretty comfortable these days that GBP is going to be a currency code and we recognize what it is. I'm hoping I don't see again again in the future the use of sterling and STG, but it could happen. But we've largely got rid of those. So if we are looking at how we can improve it, I think the adoption of standards where they're appropriate, I think, is a key element to successfully freeing up some of those challenges where the bordereaux are longer, the people are having to do inspections by hand when they're receiving them, or they may be constructing them by hand in our good old friend, Mr. Excel. So, and it's flat file. I mean, how on earth can we have a situation where we've got multi-dimensional data and we're sending it in a two-dimensional file? So the technology is not the problem, but it does mean that adoption and willingness to change is a problem.
Yeah, and then we have the FCA knocking, an inspection happens, and let's say an MGA's data doesn't hold up. What does that actually look like on the ground? Walk us through what breaks first.
Well, it's a good question of what breaks first, because there can be almost quite a lot of simultaneous things breaking. So on one hand, you could go from something like no proof of sanctions checking. So if the data is not supporting the fact that this intermediary is dealing with perfectly legitimate and properly sanctioned checked enterprises along the way or individuals, then without that, in come the fines, not just about whether somebody says, well, of course, the person sending me the data, they've already sanctions checked it. Doesn't, the FCA is not holding that up now. So you are becoming liable for that if you cannot prove that it has happened. But at the other end of the scale, so that's the sort of mechanics of it. That's the sort of like the boring bit. Sanctions checking hasn't really got a great deal to do with insurance. But if we were talking about something very much in the insurance space, then things like, historical loss ratios are key. So good performance can buy a lot of goodwill, because if you have got the proof behind you, much like the proving of the sanctions checking, you can then feel as though that auditor and an FCA inspection is going to say, okay, all of that's working really well. I can cross-reference the data. I can see the calculations behind it. I can see what you're doing. But yes, okay, we have a little bit of a gap over here. Let's mark it as an orange or whatever the RAG chart might say, and let the party go out and try and rectify it or put some mitigating sort of processes in to be able to handle that. But without the key history, then you're on really rocky ground to get through those fairly searching questions.
Yeah, no, nobody wants to be in that position. But this reporting standards are not new. The cover holder reporting has been around for many years. And then we have the MGA, let's say, type of organization rising, growing really, really fast. But adoption outside of Lloyd's is still, let's say, inconsistent. Why hasn't the wider MGA market caught up with this? Is it awareness? Is it cost? Or do you believe it's something else?
Well, I think if we look back historically, underwriters used to have quite a lot of power about what they wanted, and they would edict to their cedants, to the parties that they were doing business with, and they would say, this is what we require, in much the same way as our accountants specify what was required. That's the relatively easy end. But as we go further to the left in the chain, that mandate, that actual seeing it through with potentially uncomfortable consequences gets weaker and weaker, wanting to put more obstacles in the way to getting hold of the premium. And the problem is it's driven by that premium. Don't hold it up. Let's get the premium. We'll sort out the rubbish later. Actually, what strikes me as really interesting is if we take our sort of global understanding of how money works, there aren't enough of pound coins in the whole of the world to actually put in one place and say that is all the world's money. So money is only data anyway. So why is money being data any different from the insurable interest sum insured or the deductible? Why is it's treated in any way any differently? In order to be able to trade correctly and to be able to prove and get that goodwill and that historical information in place for a good, clean operation, and therefore perhaps encourage renewal of delegated authority agreements, better terms with capacity providers, a growth in the market as an organisation, it means we need to treat all data points with the same level of focus and respect, instead of just saying, we'll accept this and we'll sort it out later.
Yeah, and I'm pretty sure you have seen everything and anything in the spectrum on the compliance side. You have seen, I'm pretty sure, just the box ticking like this, check, when the auditor is coming. And there's the version that actually it's inherited in business, or more than inherited, it's embedded in the system and in the organization's day-to-day. How do you tell the difference between, or the difference when you're evaluating an MGA's operation that has the box ticking versus actually the full embedded version?
I think the first thing and it's frightening to think that this probably is quite rife. Is the box ticking literally ticking a box, or is it creating some searchable and usable data as a response? Now, I'm being a little trite here, but if somebody has got a PDF document with a biro mark on it that's ticked, and okay, we might think that that's sort of almost amusing, but we see it a little too often, then what are we doing with that? The fact that it is ticked, until somebody opens up that SharePoint file and opens up the Word document or the PDF and looks at it, in what way can we analyze that? In what way can we see a trend? What way can we see any gaps? What way can we capture the items that are not being picked up correctly? So might be oversimplifying it, but at one end, if you literally are tick boxing on a PDF document, or one step further than that, you have a list in a spreadsheet which you write done, or you put a little green tick next to, it's not a central system. So I think really the governance there is, can you actually look across the whole organization and see those ticks? We've got to ask ourselves, why are we ticking? What's the process that's allowed us to tick? But if we can't right across the organization, see the statistics from it, then we're holding it in little isolated, sort of islands of data. And then it's not really data at all. It's just information. And back when I went to university many years ago, I hasten to add, my first lesson in front of a big hall of people was the difference between information and data. And nothing much has changed. We might have the information, but if we can't analyze the data, we might question, how do we get this information that we're now relying on? But I think also the other element is, a simple test is to sort of look at the underwriting discipline itself. What checks and balances do they go through? Not just a single underwriter rating something or putting a rating engine together. And that leads on to that whole question of AI, I'm sure we will get to. But are we able to backwardly unravel it? Are we able to see how it got there? We're seeing a lot more compliance requirements, yes, influenced a bit by the AI piece, which is not just the what it did, but the why it's done it. And I think that is really key. You can't just take the answers. You have to know the why as well. And that's going to become a hockey stick of information and data that is going to need to be understood, analyzed, and available across organizations.
You've seen organizations with 20, 25, 30 plus years of data. And when you speak with them, they still can't make a reliable underwriting decision from that historical records, all that data they have. How does this happen, and where does it start breaking down?
I think it's actually a surprisingly simple question. The evidence I've seen, and that's not across every organization, and your listeners to the podcast might sort of go, well, we don't do it that way. But what I have seen is the analysis of the bordereaux is completely disconnected to the financial transaction that happens as a result. There is no connectivity between the two. So they may have one system, which is all about that exposure information, how many horses, how many ships, where are they sailing, etc., assuming that they have the tools to analyze that, but at least could argue it's in rows and columns. They could do something with it. The next stage from that is that they have actually consumed that bordereaux, if that's their role in the chain. Of course, they may be just solely producing the bordereaux, but depending on where they are in the chain. And that's a story for another day of what an MGA really is, depending on where they are in the chain. But if they were consuming bordereaux or producing bordereaux that the underwriter wants to consume, then have they consumed it into some kind of logical model? Have they been able to compare different spreadsheets of information and data and come out with something consistent all the way through? That usually then ends up with an arbitrary amount of money turning up, and somebody using a totally different system to post the premium. And there's a complete disconnect. Worse still, I mean, if they were all original premiums, you could say, well, that $50,000 was for that bordereaux. Some poor soul's got to go, yes, it is. Or no, it isn't. And then you've got the next thing with, what about all this rolling? You've got your APs, your RPs, you've got things that are going in, coming out, and then sort of going, well, how many changes happened in this next bordereaux? What's this bordereaux for in terms of what happened last month? So without putting it into systems properly from day one as it arrives through the door, it's an extremely difficult job to be able to rationalize or connect the pricing activity they've done with the bound risks, with the changes to those bound risks, and then the premium that is being collected or returned accordingly. Never mind starting the story on claims.
And let's say we add some nuances, or I don't want to call them edge cases, but I'm pretty sure they're all over the place. Let's say UK versus GP.
One of my
I'm pretty
favorites.
sure everybody, exactly, they're everywhere. And I'm pretty sure that's not unique. How does this kind of, let's say, foundational data, broad compound over time across delegated portfolio?
Well, time is actually a really interesting point here, because let's keep our discussion to something relatively simple. Everybody will have got sort of an opinion about, and they'll think that it's relatively easy, and it just exponentially gets more difficult. But let's, for description purposes, use our friends' country codes as you gave as an example. So we've got a very simple one. We're sitting in the country. I'm sitting in the country that is the United Kingdom of Great Britain and Northern Ireland, which is actually quite a big map. And the code that represents that is GB. Slightly easier for US, meaning United States, or United States of America. So therefore, we already share perhaps that common language challenge, and both fall into the same camp. So, but those terms, those English terms for those countries, it is unlikely that that great big long name of the United Kingdom is wanting to sit on a contract, for example. You probably want to either put UK or United Kingdom, keep it nice and short. And that is also showing where data is used for different purposes, it might be expressed in different ways. So the common language behind it would be the code. And yes, we have a little bit of a problem insofar as our code is GB, and UK is a reserved code in the ISO world, so that nobody uses UK, let's say, for example, Ukraine, which would just add to the confusion. It's bad enough as it is. But if we then sort of go, okay, that's just a few cases. There's 200 odd countries where we very rarely get new countries, but we'll deal with them. When Sudan split to North Sudan and South Sudan, you have a challenge, which is that you might have had a single code for where the risk was placed, where the risk emanated from before the split of the country, which you now lose that granularity when the country splits. And now you have one half which is sanctioned and the other half which isn't, but you don't physically actually know the location because it's just in the old country code for Sudan. So those kinds of challenges need a lot of effort to update the reference data in all organizations. And that isn't a part-time job. It's not a one and done. It's a continuous team's job to keep that data, not just what is available for new risks coming through in whichever software system anyone's using, but also to redress the historical data as a continuous thing. Can't just forget about your historical data going backwards. But what I would say as a foundation is adopt the standards that are the lowest contentious elements, countries, currencies, etc. There is always going to be quite a few edge cases. They're slightly less edge than more sort of just not quite in the middle. And you have got challenges when we are in a global market. You go down one level further than the country code and you're dealing with the state or subdivision. And now you have challenges around local languages that are used. You might have one code for a particular area on the planet, but it might have 3 different languages that are being used, or even in some of the Russian areas, 5 different languages that are being used for that same code. So that becomes that challenge, but we should leverage that because that translation model is already there. Comes in one language, we should know what code it is. It's when it gets to the stuff that isn't standard that's where I think the more exciting technologies can start to take up some of the heavy lifting. But I really think, I've said this recently, I'm sure anyone who hears me talk on in other forums will hear me say, I think it's a very big disappointment that we're going to waste the planet's water resources cooling the supercomputers to spend time converting UK into GB. Let's use it for something a little bit more sensible, a little bit more tricky, a little bit more edge cases, natural language, that kind of thing, and actually start to adopt sensibly codes where codes are supposed to be used and use those standards correctly.
Yeah, let's add some insurance type of situation. Let's say net premium. Net premium means something completely different depending on where you sit on the value chain. It could be, I don't know, you'll share more on it than me, but how does that definitional gap create, let's say, real financial exposure in a program, and who usually catches it and when?
Well, I'm certainly no accountant and don't profess to be able to coach on those kinds of elements. But I do think if we go back to our friend, the 5.2 reporting standards, nobody considers who the audience is supposed to be and who the author is supposed to be. So the challenge is, from whose perspective is this data? And on that delightful spreadsheet, we have the challenge of things like brokerage. Well, we know that an MGA tends to give away brokerage and a broker keeps brokerage. But an MGA gives away brokerage to a broker. But they may be getting the data from a broker and then passing it on to a broker. So whose brokerage is the brokerage? So these kinds of challenges exactly exemplify the context. So in a data feed, if you've got a package of data, the author should be given a role. And that therefore means that we say in the context of this role, the author who is sending this in, we can now contextualize the information that is actually given to us in each of the columns. And those column headings can now mean something a little bit more clear. And we definitely have. I've got clients who are traditionally sitting in the syndicate space. They have set up an MGA and they think in net premium up. They think what's going to go to me, but it's not me. It's them sitting in the other desk that they're sitting in at the other part of the day. And they're sitting there saying, what is my net premium? It isn't. Think of you as an intermediary. The net premium is what's going to be as a result of the gross premium with all the deductions and the leverages happening as it goes through the chain. So context is really vital. And I think that's underrated. We don't really have the concept of the context of the author. And I think data and data payloads will enable us to do that better.
Yeah, and then you have to build the bordereaux, which so far I haven't spoke with a company that's excited about building them, putting the time to do them. But let's say an FGA is evaluating bordereaux to a data platform or any new technology vendor. What are the 3 quality data questions they should be asking before they sign anything?
I think it doesn't matter what you want your software to do. I think one of the most overarching questions for anyone buying software, whether it's, or anything that isn't just a piece of software on your phone kind of thing, is do you wish to work with this group of people? Because nothing will be exactly as it is when you adopt it in the first place. So it's as much about the team and the delivery from the organization. And that's almost 50% of the entire job, because most people consider that bordereaux tools, bordereaux sort of software, a bit like PAS systems, they sort of do what they say on the tin to some extent, but they'll never be perfect. And I've worked in software deployments and sales for 30 odd years. I've never known anyone get desperately excited about software, and especially not if they're a broker or an underwriter, but they do get excited about what it can enable them to do. And they're only going to do that if they're working with a team that can enable them to do it. So I think firstly, it's about the team. Never mind the technology. The technology moves so fast. Whatever you had on day one, you're looking at how they're going to move on to question 2, which is, have they got a record of continuous investment? Because again, today is not the end of the story. Do I see the evidence that they have continually evolved, changed the platform underneath, dealt with technical debt, all those kinds of things? Because if I'm looking at a disruptor today, a brand new bordereaux management tool, I'd probably have some questions to ask that would be quite searching about their authority in this market, because the experience is just not there in the new tools. We find people want to spin up new technology. They've got a grand idea. They can layer some AI over it. Ta-da! Doesn't it look pretty? But if it hasn't got that structure and the elements and the building blocks and the team's understanding of the challenges of columns changing their context, etc., then it's just something that is doing transformation. So I think looking at someone with experience, with a team that understands your challenges and you want to work with, and that their technology has historically been invested in and is now, looking current and it's working well, and you can therefore rely on the fact they're going to continually invest in it. But if I was trying to test whether they understood what they did, I would ask some very strange questions. And sometimes I can be in a room and I get some very quizzical looks. But if it's touching anywhere near London, does the vendor understand what a section is? Because if they don't understand what a section is, then the whole onward journey of packaging that data up, splitting it, dividing it, and then presenting it as a financial transaction to go into Velenetic is almost impossible to reconstitute. So if they don't understand those basic requirements, and that also fundamentally, I try and dispel them to get too hung up about class. We find teams get very precious about their way is the only way they should work for their class. It's still just data. You've got stuff that's common at the top, start date and end date. You have got things that are underneath, which is various coverages, and you've got capacity that is backing it, and you've got some commission rates wandering around for everybody to earn some money out of it. If that's the case, it doesn't matter whether it's bloodstock or whether it's shipping. It shouldn't make any difference on a class-based scenario. So not to be too hung up by class. Choose your partner wisely, look for their performance historically, and make sure that you want to work with them going forwards in the future.
And now we see this new wave of AI. A lot of AI is being sold in the London market right now. from where you sit, what's the tell, let's say that a product is dressing over a real problem versus actually solving one?
Well, I saw a recent, one of our clients had done some absolutely lovely work with AI where they really tackled the problem of addressing or walking into the room and saying, where is the problem? Not saying, I've got some AI and a grand idea. So they were very much searching for where the problem is. And they had a mixed business. They were actually a broker, but they did delegated line slips, etc., as well as managing their open market risks. And as a result, they've got a single core PAS system and they have got business coming in different ways. So it doesn't really matter that it's delegated or where you are in the chain, you've still got that same problem. Where is the problem that we can best address with AI? If it is to convert UK into GB, I think we've missed the point. If it is to take business that's arriving, let's say in our traditional, we love it all, Excel spreadsheet or in our emails, how can we get that data out immediately with no rekeying and turn it into standard structured data? That's where our first problem is, wherever you are in the chain. So less so for the underwriters, but even so, when they're getting risks on a placing platform, they would want the same kind of thing. How can I get this data out in a structured form that means I don't have to rekey it? And I think that's where it really wins, taking that natural language, turn it into standards and structured data so that we don't have to have a laborious human intervention to start mapping data or reviewing it. It's got to be very careful about making assumptions. A hurricane is a place in America as well as being a peril. So, you've got to sort of try and work out how the context works. But I think every month, every week, the AI technology gets cleverer. It's going to need more rigidity around it. It's going to need its ethical elements. It's going to need all of the controls around it. But I think that is coming probably a little bit late, but it's coming to the party. It's bringing the dessert. But we do need it to be in place before we can really see this work at scale.
Yeah, and then you're seeing all these use cases being pitched to the London market right now. Are there specific ones that you truly believe are going to hold up inside the regulated environment? And what separates those from the ones that are basically falling apart during scrutiny?
I think the big thing is it's less about which ones, but about how each one is actually delivered. So, for example, back to an earlier point, if we are able to see and to audit the why, then any of those AI functions and how it's brought to market is going to be easier to be able to get through audit. So if people are not focused on the why, and how we can prove how the agent got to that outcome, then I think it's less about which of those agent tasks are actually being performed and more about whether any agent task can be fully audited. And I think that's really important because if you can't prove the why, it's a bit like not proving the sanctions checker. You need to have that proof. And that's perhaps where a lot of people are coming to the market. They have to. They get an hour's pitch in front of a new audience, sometimes with a product that's got no history behind it. They are, offering that the first client will be a collaborative partner with them. I do tend to try and rationalize that to say, if we treat the underwriter and the broker a little bit like a brain surgeon, and I am the patient as the software vendor, and I sort of rock up and say to the underwriter, what would you like me to build? We hear that quite a lot. But if I rocked up as a patient to a brain surgeon and the brain surgeon turned around and said, how would you like me to perform this operation? I think I'd get a bit anxious. I would like the expert, the brain surgeon there, to tell me how it works. Now, traditionally, we've thought that's the underwriter and the broker telling the vendor how it works. But actually, the roles are reversed. What we want is the market to tell us what they want the outcome to be. And then we, in turn, as experts in the software environment, make the outcome happen by whatever tech stack and whatever suitable tools are available. But our responsibility is the very unsexy bit, which is to put the compliance that traces the whys into it so that it will stand up under scrutiny.
Yeah, and when we move, let's say, in the delegated structure, the MGA, capacity provider, and the reinsurance broker usually tend to have different definitions of the same data, of the same information. How do you believe we can standardize that across the chain without someone losing commercial ground?
It's not easy. It's a problem that's been in the market for decades, since the invention of delegated and our dear friend Excel. I think it goes back to that point of the context and the author. We need to be able to understand who is sending it. And traditionally, sending an email with an attached spreadsheet doesn't really address that from an analytical point of view. And the data payloads with an author, a sender, etc., and a recipient does give us that first chance of being able to potentially contextualize column titles and data in a much more structured way.
And then we get people outside from traditional insurance investing or more investment companies coming to the capacity providers without no insurance background, no nothing. What does that mean for data standards and oversight inside delegated programs?
Well, I've seen it firsthand. I've got a reinsurance broker who has a growing capacity provided to them by investment companies. So not traditional insurance syndicates and companies, so they're investment companies. Even as a reinsurance broker, whilst we sometimes question is a delegated authority much like a bordereaux that accompanies a treaty? From a mechanics point of view, yes, they are. They're very similar. From a business point of view, yes, of course, it has differences. And I think that highlights the fact that the standards are probably needed more than ever because these investment companies are coming in and looking at this data and going, net premium, what's one of those? I'm oversimplifying, but I think we need it even more. We need to be able to take the wider capacity market and be able to be really clear and unambiguous about what these data points are. I mean, after all, we always hear people say, well, the banking industry have done it decades ago. The insurance industry do it as well. It's just financial services. What's the problem? But of course, an instruction to pay a bill is a relatively small number of data points. So, you're talking an amount, a date, a sender, a receiver, and, it's relatively manageable and it's pretty clear and unambiguous. And if you saw a instruction for a bank, it is pretty codified. And I think the reluctance is that the belief that we can get away with going to the same level as the banks have done with our larger payload of data and then think we can get away with it without doing it codified. I think that is very much AI will solve everything. It's just a mapping exercise until you realize you've got 500 mappings going on and they all have to be managed. And I think that's not just saying that AI can then manage the mappings because a lot of them are contextualized and language based and they may have nuances in their meanings which are not easy to understand. And actually, you can be sitting next to somebody in an organization in the London market and you can fundamentally disagree on the meaning of a particular term. So the taxonomy is not something that we could just pick up from the internet and ask AI to learn from.
Yeah, you cannot ChatGPT everything nowadays. But then you have these operational failures that sometimes happen. And at what point in delegated authority causes the most downstream damage, but never makes it to a conference panel?
Well, if you have an open market risk and there was some error in the data that is moving, let's say we're in a completely digital world, we're moving data from A to B through all the parties and it's all nicely codified, but an error is spotted somewhere. Obviously, we want human in the loop. So at some point in the chain, there is either an automated or electronic query, or there is a human who has spotted something which isn't right. It doesn't really matter how it's spotted. At the right point, it's fairly easy to solve. It's pretty straightforward. The challenge of delegated is just numbers, because that's one risk. If you spot the problem by whatever means, be it an automated check or be it a human checking, and you spot it at the wrong time, then the problem's a bit bigger. But if it's now going to be 250,000 rows and it's not spotted, and that starts going through the systems, that's an awfully big unpicked job when you may have moved the data that corresponds with the premium or the claims that are going through the systems as well. Bearing in mind, currently, we may not see that bordereaux until 90 days after it was actually, the subject matter of the bordereaux was concluded for the month. So you might see it in March for a January bordereaux. And so by the time you're banking that premium and then you start to spot that there is a problem and you've got 250,000 rows in there, that is actually going to be quite a big unpicked job. So everything is by scale of the number of records. And so we should not underestimate the need to get the data right at the beginning and to test that data and to be patient about getting it right before you push it on down through the chain.
Yeah, and over 30 plus years, I'm pretty sure you have seen a lot. And when you engage with an MGA and you're helping them, let's say, build or rebuild their data technology or their tech foundation, where do you actually start? And how do you get the buying from underwriting teams when the right answer isn't the one they came expecting?
Well, I mean, it's almost invariably not the question they intended to turn up from. And that often is the audience who are in the room. So we tend to see that it is the producing end of any organization that is in the room at the beginning. We may be lucky if we have the COO present to sort of like look at it as a sort of operational basis. And it's always a good day if you get the FD there, because then obviously at the end of the day, we need to remind all parties in the chain that all they do is move money. I mean, it can be unpopular to point that out. But they don't grow apples and they don't launch, they don't rockets. All they do is pay valid claims. Okay, there's quite a lot of data that surrounds that, but that is what they are there to do. And I think the first thing, point made a little earlier, is I think the first thing is to dispel them of getting too hung up about class. So take them through the structure of the data that they are dealing with, and also what the new world looks like versus what their current world looks like. If they've already got some kind of system in place and they want to rebuild or restart, I think the biggest challenge you need to start to unpick people, or sort of, I always imagine trying to prise their fingers off, is please don't do a data migration. Because the whole point of moving system was because the old one wasn't any good. Or more to the point, the old one might be quite good, but you didn't use it properly. Looking at a fresh start is easier if you're dealing with small number of risks, like a reinsurance broker, for example. They may have larger, but numerically smaller number of risks. So each of them can be cross-checked, can be looked at, and they can be managed. The challenge of doing it in the DUA space goes back to our 90 days and goes back to the time issue, was the fact that at any point, I mean, you might have contracts that start in June, end in May, and your financial year starts in January, ends in December. I mean, when's a good day to cut over? You know, when is a good day to move this? My view is runoff is a very, very attractive philosophy with regards to large quantities of data. And so too is a data warehouse. So taking your data for analysis purposes from the old scenario and bringing together it with the new, better quality data, but in a third party, allows you not to pollute the new system with the old ways of working and the old data. And I think that's a very attractive thing that 20 years ago, we didn't really have that sort of data warehousey kind of idea. I mean, you did have obviously large databases, but they tended to be just a backup of what it was that you're using as your deployed solution. So I think it is a few reality checks, really seriously thinking about data migration and what should be taken across. Of course, if they are working in a situation where the actual bordereaux are in one system and the finances in another system, funnily enough, that could be advantageous, because only in the new world do you actually want to address the problem of bringing them together. And if they haven't got them intrinsically linked, don't try and link them now, because you'll be chasing your tail forever. And also, whenever anyone moves a system, it doesn't matter whether it's a reinsurance system, an insurance system, a broking system, an MGA system, is, have a really, really sensible and well-practiced cutover of what's going on. Parallel runs, interesting, but again, back into that whole bordereaux situation, you've got the sort of almost wave of data that is coming and going, and there isn't a single point in time where you can make any sense to rationalize. So it is a challenge. There is no single answer to that, and each organization will probably have different balances of DUA versus a traditional business if they're mixed, or pure DUA with only one binder, or they are actually running multiple binders and the problems get inherently more complex.
Yeah, when you enter a company and you say legacy system, data migration, technology, or technical debt, those are words nobody likes to hear, but those are some of the decisions that, I don't know, sometimes looks clean on a roadmap, but until it doesn't, what's your honest advice to an MGA facing that call? And how should they be thinking about their historical data and when they should actually make the move?
So I think your finance probably dictates the first when you should make a move. So I would always suggest that at the end of the day, you've got the big bad boss waiting for your financial report. So you should always move at your financial year. End of story. Doesn't make it easy if you've got binders all sort of starting and finishing all over the place, and long tail, and worse still if we're now dealing with continuous binders coming into the London market. So, how do we cut these things off? And if the data wasn't particularly good, then it becomes very difficult to decide what you're slicing and taking with you and what you're not. So I think the challenge is always be run by the finance department, sadly, if you don't like them, but they'll be delighted. I would also suggest that as they approach that cutover period at the beginning of the new financial year, that the finance department do their bit by matching off every cotton-picking piece of cash they possibly can so that you have the least amount of unmatched cash or anything else flying around. That actually is probably the root of a lot of the problems. It is an awful lot of unmatched cash, people not knowing what it's for. But at the very least, that you know it's who it's for. So start with the who it's for, even if you can't work out what it's for. That at least means you're not having to return it to the Charities Commission if you can't work out who it's for. So that at least addresses your financy bit. But I do think when looking at new systems, you need something which has got what I would really refer to as a solid underpinning. And that really comes down to data models. If you go to a vendor and they can't provide you with a diagram of the data model that is consistently going through their system, then I would certainly have some questions. And I'm not sure I'm convinced that people saying, oh, well, we don't have to have data models because we're so flexible, we can do this and AI will now sort it out. I'm not convinced. At the end of the day, we've got bits of money that need to turn up in pots that need to be reported to our regulators, and that needs control. And therefore, control must be very, very distinctly auditable, and it should be unambiguous. And we shouldn't be coming up with, oh, well, how did it get in there? It should be really, really clear how it got in there. So my view is AI is probably best placed at the front end, addressing the challenge of natural language, the challenge of the chaos in the outside world, but at the earliest opportunity should be turned into standardized data where it's appropriate, and then human in the loop, or maybe even consider AI in the loop and do it the other way around, depending on how we feel about that, and then make it more and more structured and more regulated as it goes through. But definitely the moment there will never be a good time to move. And frankly, my view is if you are in the first half of your financial year now, then move at the next financial year and just go for it, because the problem will only get exponentially worse the longer you leave it. So cut it down, look at your essentials, look at what's needed for regulatory requirements, what's needed for financial reporting, and concentrate on those moving across into the new system. Everything else can be sorted out afterwards, and you can put it in a socking great big spreadsheet if that makes you happy.
Yeah, and you can move away from the roundups. I've seen that, like, oh, I don't know where this money is coming. Round it up and
yeah,
problem solved. But then we have, I don't know, how much of the industry's data and technology problems actually do you believe trace back to, let's say, knowledge gaps, terminology, taxonomy, and foundational definitions rather than the technology itself? And what does that mean for how we should roll out these new tools?
Yes, I think you're right. I think we're at a point now where technology probably isn't the problem. I mean, there are a lot of people selling technology where I'm not convinced they have enough knowledge about what it is they're trying to solve, especially if it was created in partnership with perhaps a single MGA or a single organization. It means that without that MGA, then where's the knowledge as to how it came about? So back to an earlier point about looking for somebody that's been in the market for quite a while. And that then opens up to, well, I'm looking for cutting edge. I'm not quite sure you want cutting edge when it comes to your regulated ledgers and your ability to add up and take away. I think you need to look at something which has got heritage and has got understanding of the problem, but has been continually invested in. That's the difference. If we're talking legacy systems, sometimes some very, very capable systems that may have started out 30 years ago are actually pretty well bleeding edge if you think about what they're up against in many senses, because they have been continually invested in. And so they may be put in a camp of legacy, but actually, if you look at it and look under the hood, they've actually got some very, very capable functionality that would take a great deal of time to replicate. And if we even look at intermediary systems, this is slightly in the broking space rather than the MGA space, but 25 years ago, there were 20 or so providers of core broking platforms in the London market, 7. And you sort of think in a technology space, how on earth can we have fewer suppliers of software rather than more suppliers of software? And I think it comes down to the fact it's actually quite difficult. It's not something you can spin up in an AI tool on its own. I think it should use AI, but not necessarily be solely that in its own right. So I think, do we think that people should buy brand new software I wouldn't like to put all the new technology providers out of business in one podcast. So I think it's selective. I think it's really be sure somebody has either brought legacy information with them in their build, but they're not just new to the market themselves to build this up. And I do think that existing vendors do sometimes get a bit of a hard deal. If somebody had a bad experience with a piece of software 15 years ago and that piece of software is still branded the same and it's now being sold into their new organization, they immediately just assume it's what it was 15 years ago. So I think that's really important to understand. It's very easy to label something legacy when perhaps it's not. It may just be, I'd like to coin the phrase, I think I use it on my LinkedIn page, but no, not legacy, but legendary.
No, that's amazing. And let's say if you could mandate one structural change across the London market, one thing every MGA, MGU, reinsurance broker, capacity provider, basically everybody in the market had to do, what would it be and why hasn't it happened already?
Well, one thing I would suggest they shouldn't do rather than one thing that they should do. And the one thing they shouldn't do is build their own. I think that ship has sailed. Please do not go out and build your own software. The compliance, the accessibility, the governance that's required will turn that insurance organization into a technology house. And yes, I know we've had Instech and, we talk about insurtech all the way and we know that they're technology based, but do they really actually want to have the tail wagging the dog and be a software house first that happens to do a bit of insurance? Or do they want to be specialists in insurance that uses good tools in order to deliver that expertise and that services? So that's, I think, is definitely the thing they shouldn't do. And that's not just me as a software provider not wanting an insurer to come along and eat my lunch. But actually, genuinely, you see it in the market. There isn't the resources when those individuals who wrote it disappear and they retire. There isn't the resources to be able to maintain it. And inevitably, the same outcome happens, which is they've got to, they have nobody that knows how the system works under the hood. And they've got to now try and think about a migration to go to a new system. It does not end well. But in terms of mandate, I'd say, there's an interesting thing. I'm working with the LMA to look at the CDR. We've got the core data record out for insurance and FAC-RI. It's looking to being imminently published to extend it into the treaty world. This is all about placing. And then we've just had the data and the feedback from the market about the claims CDR. And we have just started the agreement of delegation CDR. So I think if I was to suggest that anybody, and I suppose people might suggest it sort of, turkeys at Christmas if I wasn't to suggest this. I think genuinely all of the questions that we've discussed today, all of the challenges have been about understanding the data, being able to get predictability about the data, and therefore it is about adopting standards of the data. After all, sometimes it takes quite a lot of hard work to get to that point. For example, if you'd never had a passport, never had a bank account, and you'd never had a PayPal or Amazon account, it's actually quite hard work to set those up. When you're middle-aged. Yeah, you've got a whole host of things, even though it's probably electronically more simple to do those things. But in the old days, you'd rocked up at the branch for your bank and you'd be, the person would see your birth certificate and off you trot and you get a bank account and off the whole chain will happen. So I don't dispel the idea that individually the processes of setting up a new bank account can take minutes. But if you've never had one before and you have no proof of identity, you can see that the challenge would be more. But once you've gone through that pain, when your child has not told you that it's International Book Day tomorrow and they need a costume, it is mightily easy to be able to do your fingerprint payment on Amazon and pay for it by PayPal to be able to get a delivery by 8 o'clock the following morning. And thank you very much for that ability. So that pain now has the outcome as being so simple. And that's what we have to go through, is the pain to move to standards and to commit to it and to resource the teams that are governing it and managing it and don't think it's just one and done. Yeah, you need to invest in this. I remember in 2015, no, it would have been in 2010, I was sitting in a conference and somebody was stood up at the front and they said, we believe in 5 years' time, the value of the data that surrounds a particular policy will be worth more than the premium that is being charged for it. And we have seen that evidenced in the world of Apple and Google, which is that they're not really interested in taking a cut of the transaction, the actual financial transaction that is transmitting, but they want the data. So if we aren't learning from our compatriots in the other parts of the market that the data is more valuable than the premium, it might be unpopular and it might not necessarily be quite so apparent when you've got, you're underwriting Coca-Cola, for example. I mean, it's a disproportionate sort of thing. But in our delegated authority route, we should be thinking that this data is worth more than the transactional value of the premium that is moving around. And even if we could analyze and prove that that wasn't quite the case, I bet you it would be close. I think it depends how you monetize or indeed see the value. You don't always monetize that data because you might not be allowed to, but you could see the value to decision making and to being able to then leverage AI over that data to be able to see pricing, sort of experiences, etc. And I think that's where I think if I could mandate one thing, it would be adopt standards. And then an advisory piece is value your data more than you currently do.
No, thank you very much, Kirstin. I really enjoyed that conversation. And thank you, everybody, for watching. This was Inside Delegated Authority with Kirstin Duffield. Thank you very much.
My pleasure.
Bye.